Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the Morning Market Prep video for March 18th, 2024. Well, how about we take a look at what happened overnight? My goodness, we had some Asian happiness last night, particularly in the Nikkei. Nikkei shot up 1,032 points last night, up 2.67% on some better than expected news out of China. But there is another issue coming up there in Japan. And that is they are likely going to raise interest rates in Japan for the first time in a long time. So we'll want to keep an eye on that. But that being said, we were up across the board in Asian markets. Now, somewhat modestly in the other indexes, but they were green across the board. If we look at European markets this morning, European markets are also up this morning. Once again, somewhat modestly here this morning, but showing green across the board. And here in the United States, at this moment in time, we have Dow futures just ever so slightly lower, and we've got S&P and NASDAQ futures up, with the NASDAQ jumping pretty substantially here, suggesting a 130-point gap up this morning in the NASDAQ. So we'll want to keep an eye on that as we approach the open. Just keeping in mind, I'm recording this very early. If we take a look at oil this morning, oil is also going up, not being a very good friend to the market, because as oil goes up, the calculations for inflation have that chance of running up. Oil is a very big calculation, or energy prices, very big calculation into our inflation numbers. So keep an eye on that. We've got oil up 82 cents and Brent is up 73. Natural gas is also trying to climb a little bit this morning as well. If we were to flip on over here to bonds, our bond yields, well, not a whole lot changed here this morning, but they're certainly not pulling back either. Our 2-year bonds are at 4.71%, 10-year bonds are at 4.31%, and our 30-year bonds are creeping higher to 4.44% this morning, and I've seen them tick up as high as 4.45%. So we'll want to be keeping an eye on those today. Those bonds, well, still struggling in here, and we've got the bond market, at least at this moment, completely disagreeing with the stock market. If we were to take a look at what's going on in gold and silver, it's interesting here this morning that gold and silver pulling back and resting here just a little bit as we look at some of our commodity prices. And that may be just as a response to this situation where the dollar is looking a little bit higher this morning, but we're going to have to be careful with that, because if Japan raises their rates, it could actually lower the value of the dollar. So keep a close eye on that. So what does all that mean for today? Well, how about we settle in? Let's buckle up. Let's get ready for the Monday edition of the Morning Market Prep video. Good morning once again, everyone, and thank you very much for being here. I truly appreciate it. Hey, before we get started, I want to remind everyone that we have now slipped into the blackout period for corporate buybacks. Now, as we move further and further into the end of the month, more and more companies are going to slip into that blackout period. Think about it as it's kind of this revolving door. Companies that are going to be reporting earnings early on in next quarter are in that right now. And as we slip day by day, more and more will be in their blackout period. And that goes until toward the end of April. So we'll want to be watching that carefully because that could have an impact on the market. Now, that said, let's take a look at these charts and see if we can gain a little bit of information about how we might want to approach the market for today. Try to shake off a little bit of bias. Make sure you're willing to look at the chart for what it is, not for what you want it to be. And in doing so, if we take a look and see, well, if those bulls were to find inspiration today, and it's Monday and it's a light day of economic and earnings data, then we could certainly see that possibility here, that if those bulls find reason to rally after this couple-day pullback and relatively big point pullbacks, that a pushback up right into here would seem pretty logical, and we'll want to watch carefully for that. A drive back up here, remember we've kind of slipped below that trend again here in the chart. So a drive back up would not be out of the question. The question would be whether it can break through that resistance, and if it can, then we start looking a little bit higher, maybe coming up into here and then pushing on higher into here before we're trying to test that resistance level to the upside. So let's take a look at our SPY. SPY, whoops, there we go. Our SPY pulled back and broke this trend. And that raises maybe just a little bit of concern here in the market. But if you'll notice in this chart, you know what? I made a mistake. Let's take a look if the bears were to engage here on the diamonds chart. If the bears were to engage, well, I'm going to look at a retest of the support level right down in here to see whether or not they can hold that level of support. Well, notice we've done it multiple times. We've bounced right in that area here, trying to hold in that area. So if they can hold this support, we're in good shape. If they drop through into that area of the chart, well, you'll want to notice that we've got some support in here, but it's a little bit on the choppy side of support. A lot of price action in here that could catch us, but unfortunately, I think if we fall off of this little ledge here, we could drop pretty hard. Some big point moves to the downside would certainly be possible. Now, back to our S&P 500. Our S&P 500, we have, well, a complication here as well, having broken this downside trend, but it's not terrible just yet, because if you'll notice, we've got some price support in here. If you guys remember me marking that out, that is the area where we would be looking for that little bit of price support and trying to hold. If the bulls can follow through on that, continue to push on up, well, I would say pushing up into this downtrend would be a pretty interesting test to see whether we can break through some of this price resistance in the chart. The way the market has been acting, there's every reason to believe that's possible. And with the QQQ surging this morning, every reason to believe that that is possible. So watch that carefully. If we can push on through here, then of course we'll want to be watching that resistance level up there, and of course that potential running into that resistance and pulling back, but also that possibility we could push on through. If those bears were to come into some inspiration today, well, first off, we're going to test this level of price support and see if that holds. If it does fail, then we're probably looking down here. A little bit of price support in there. And then unfortunately, if we go much further than this area here, notice we're going to drop into this gap, and we could move fairly quickly to the downside. Now, that's going to be a big point move. And as I continue to say, that our upside moves seem to be a little bit on the limited side, and they lack breadth. And when we move to the downside, we have these big openings that could create these big point moves to the downside. So I would suggest just raising your stops, stay with the upside trends, but make sure you're protecting yourself here in the market in case that big shift happens to come all at once. Our QQQ getting a pretty big point bounce here this morning, and you notice that what happened in here is we did drop below this support level and we ran that risk of falling straight into this gap. We're getting an outside move this morning trying to pump this back up in the pre-market. So if the bulls can hold this area of price support, if we can bounce right back up through there, well, I think our next test is we need to push right up into this downtrending area and maybe test some of the lower side of these candles in here to see whether we can push on up into that area right there. Now, breaking through that level changes everything pretty quickly. That if we can break through and prove to hold up here, then we might be testing these areas in the market up in here and then surging on through to test all-time highs in the QQQ. Now, if the bears, you can see it really wouldn't take all that much inspiration here to push those bears hard enough that we could drop. And falling into this gap means that we can move pretty quickly. There is a little bit of price support right there that might catch us just before we fell all the way into that gap, all the way down. But watch that carefully here. QQQ, relatively high risk here in the market. Now, one of the other things that I want to bring up is when we go into the blackout period and when we start winding up earnings for the quarter, there is a very common thing that occurs in the market, and that is we enter a very choppy market condition. So it is possible we could stay relatively range bound and just go nowhere here for a period of time as we sort out all of these details. Now, Wednesday this week may actually create quite a little bit of volatility. We'll talk about that in a minute. But just kind of keep that in mind. The blackout period heading out of the earnings, we're losing that inspiration of earnings, and we're entering that more area of the market where we're just unsure about what comes next, and sometimes that creates choppy wide range consolidations. If we take a look at our IWM pulled back. We found that price support in here, and on Friday made some effort here to lift up off of there. Now, if the bulls can continue to push this up, we're going to look for levels in the chart somewhere up in here to see whether or not we can break through the, that big black candle there, pushing on up into this congestion area of the chart. Now, breaking up through here puts us into that situation where we'll still have more resistance above that we'll be thinking about, and that potential as we push back up for this downtrend break. And that may be somewhere right up in here where we could get that evidence that, hey, the bulls have enough strength to push us on through to that major resistance area here in the chart. One of the reasons that might be possible is just simply the rotation that we're beginning to see. I've been mentioning this for a couple of weeks on that rotation, and that's helping out the Russell here dramatically as some of the tech profits are rolling off, and I think rolling into more defensive type plays heading in toward that spring session. Now, looking at the bear side of the market, well, you can see in here it really wouldn't take a whole lot of a bear attack to push us off this cliff in here and start driving us down toward these next levels of price support in the chart. So if those bears get going, they could push us down here pretty quickly. Now, we do have a little bit of a support level right in here that we have challenged many times before. Popped above and held, and then broke down and held as resistance, popped back above and then failed. It's been all over the place in this line here of support or resistance. So that should be a fairly good tested area of price support if we were to get down in there. Failing through there, though, really creates some negative issues, I think, for the Russell. Let's take a look at our VIX. Now, our VIX has been pretty interesting. We have had just this major complacency going on in the market. Everyone believing that there is no chance that the Dow could fall, that AI and big tech are going to consistently go up forever, it seems like. And we're doing a heck of a job right now of ignoring our bonds, which are telling us, hey folks, there's more of a problem here that we're willing to admit. And we can see that we held onto that price support in here and pushed up. But Friday, we pushed up and then we faded all the way back. So we didn't break through the upside of this channel in here. And that's where we'll want to be watching if those bears were to really get going. If we were to pop out of here and make new highs, breaking through some areas of price support in that chart, that's where things could come into a bit of a concern. If those bulls can continue to show lots of energy here today, willingness to push, and QQQ is sure showing us that here in the pre-market, then that possibility that we could fade on back, because we're so centric into tech right now. That if tech moves up, the market moves up. If tech moves down, the market moves down. And it doesn't have to be that many tech stocks doing it to move that market back and forth, because of their massive weighting in all three of the indexes now, Diamonds, SPY, and QQQ. That really changes the dynamic here, and it also shows us just how thinly led this market is. If that tech sector runs into trouble, well, I think that if any one of the major players here in the tech sector catches a cold, the rest of the market's going to end up a little bit sick. So just be a little bit careful with that. And then if we take a look at our T21.22, our T21.22, the 4-week new high, new low ratio, bounced back nicely there on Friday. It was a pretty hard fall on Thursday, but bounced back nicely on Friday, coming up here into that 50% area, which means, well, we're kind of straddling the fence. And probably not a big surprise that we're straddling the fence with the uncertainty of the FOMC coming up on Wednesday. So keep an eye on this. If the bulls can find inspiration here, well, we have about an equal opportunity to the upside and to the downside. And it kind of all depends who finds that inspiration here on the bull and bear side. I'm going to give this to the bulls right now just because of that. Just that massive enthusiasm that the market has, despite what we're seeing in the bonds. But watch that closely here. It could shift very quickly, and again, some big point moves to the downside, I think, are possible. If we take a look at our T21.08, percentage of stocks above the 40-day, well, you can see we hooked just a little bit over here on Friday, bouncing back up. So we see that little bit of a hope of a relief rally potentially coming in here. You'll want to notice that we're kind of bound by a little bit of resistance to the upside. We've got some support in this area of that chart to the downside. So watch that carefully in here, just realizing that we may be lacking some momentum here over the next couple of days as we wait for the FOMC. So be kind of careful here in the market. And if we take a look at our T21.07, well, once again, we had a little flatness, a little hook starting to show up in here in that chart. A couple things to be made note of is we did kind of slip down below that area of the chart. We broke a little bit of price support in here. That gives us maybe a little bit of concern, nothing major, but if we can get that bullish surge back up, we can recover that pretty quickly. So T21.07 ended up Friday maybe just a little bit on the flat side here as we bounce back up. And then this is the one that really gives me the concern, is T21.01. T21.01, as we tried to bounce back up on Friday, notice that our market breadth here was pulling back. And that's one of the things that we have been plagued with here for a while as we rally, and we've been rallying in some big point moves to the upside. We have not got a corresponding move in the market breadth. Now, that may change because we're pushing up here and we're trying to break out above that area of the chart. And if we can hold a little bit of price support and see that bullish wave pick up in here, well, then we might be okay. But if that continues to fade, and I think there's a reason that that could continue to fade, because first off, we're going to be waiting on the FOMC. Second off, we have the blackout period that's affecting corporate buybacks here pretty dramatically. Corporations are not going to be able to do very much here in over this next month, so we'll want to watch that carefully for that possibility that this could continue to fade, meaning that any direction, if we continue to fade up or down and we continue to fade in market breadth, should be questioned carefully because the reversal could snap back all of a sudden in there. So just watch that closely. If we take a look at our economic calendar here for today. Now, our economic calendar, we don't have a whole lot going on in here. You can see we got a housing market index number. They're suggesting that's coming in at 48, which is flat over last time, so watch that carefully. I'm not sure that we're going to get a great big reaction out of that number anyway. And then of course we have a 3 and 6 month bill auction in here to be paying attention to. As we move forward, into Tuesday, we've got an FOMC meeting begins on Tuesday. Housing starts and permits. That'll be a little bit more important. We've got a 52-week and a 20-year bond auction. 20-year bond auction, obviously, could be more important to be paying attention to. And international capital, Treasury International Capital, will probably ignore that. The big deal this week is going to be this FOMC meeting. They're going to give us their market predictions essentially here, what they see going forward. So keep an eye on the FOMC, and then of course the Fed's press conference here on Wednesday. So don't be too surprised, guys, if we see largely choppy market over the next couple of days as just kind of the hurry up and wait for the FOMC. We could see whipsaws, false breakouts, false signals all over the place as we wait. So make sure you're being very, very careful here. For the rest of the week, we're going to be going back into those jobless claims, Philly Fed, current account. We've got PMI. We've got existing home sales. We're going to have leading indicators, natural gas report. And then heading into Friday, well, guess what happens after we get past the FOMC? Well, all those FOMC members are out of their blackout period, and they're going to start talking it up. So we'll want to be paying attention to that as we have a pretty big round of conversation, and I would expect next week that will continue from the Fed. We've got Baker Hughes rig in there as well, which we typically ignore. Looking at our earnings calendar, there is not a lot for really high energy earnings reports to move us a lot. This morning we'll be looking at SAIC. Looks like that is moving a bit lower here this morning after its report, maybe breaking some trend in here, so keep an eye on that. In this afternoon, the only notables that I have are DLO. LO, there we go, and STNE, Stone Company. So watch those carefully, and as we enter this week, very few earnings this week. There are some notables to be paying attention to, and we'll cover those as we go along through the week, but just not the kind of things that move us tremendously in the market. Let's take a look at a few stocks that could be setting up for today. But before we do that, everyone, if this is the first time you've seen these videos, if you could do me that favor and click that subscribe button on YouTube, and also click that bell icon when it pops up so you'll be notified every time I post a video. And if you find these videos to be useful or helpful, if you could do me that favor, and that would be click that thumbs up button and leave that brief comment. That helps the channel to continue to grow. And remember, by the way, I truly appreciate all the kind comments that you guys put out there on YouTube. You humble me every day. Thank you so much. Remember, even an emoji counts. And also, if you would like to, feel free to post this video link into your social media feed. That helps more people find the video. I truly appreciate it. And then just a big shout out to everyone who continues to support the channel through the Buy Me a Coffee link just right down below the title of the video. Thank you so much, everyone. Let's take a look at a few stocks that could be setting up. And remember, guys, these are not recommendations to buy or sell any security. You're going to have to do your own due diligence. Be very careful in this market. As I said, there may be a bit of a hurry up and wait kind of atmosphere as we wait for the FOMC. And the FOMC, boy, I think all bets are on, anything is possible on this FOMC because we're so wound up in emotion right now heading into that decision from the Fed. That being said, make sure you're being very careful. You're following your risk guidelines. You're following your risk tolerances. And be careful with complacency right now. We're showing those signs that the bears are showing a little bit more activity in here, and being too complacent, thinking that we're never going to go down, can be a very dangerous situation and can be very harmful to your accounts. Let's take a look at some of these stocks in here. And first off, I want to mention some of the ag-related and commodity-related stocks out there. If we take a look at GLD, gold, this meteoric rise, just straight up. And I think it still needs more consolidation or rest for pulling back, but you can see we're trying to pump up just a little bit this morning, get a little bit of buy going in there today. There is that worry here in gold and silver that I think that the market, what gold and silver bugs are thinking is that the market is really wrong right now, that the confidence that the Fed is going to be cutting rates despite the fact of rising CPI, PPI numbers, and the jobs market being hot, that there is a problem here and there's a disconnect. And so we're seeing some fear here, I think, from gold and silver. Now, of course, we've also been seeing the dollar weakening as those bond yields are going up, and that's helping to support gold and silver. But rest, pull back, come back into this trend, and I would be looking for that next opportunity to the upside in here, remembering that the decision from Japan could have some impacts on the dollar, meaning it could also have some impacts on gold and silver. If you take a look at silver popping through this resistance. Now, we've done that before, popped through the resistance and then just turned back around and failed. That's still in the cards. And remember, this is a very steep rally, so wouldn't be a big surprise if this needs a rest or a pullback here on silver. But being very strong here in the market, we'll want to watch that closely. If this were to rest or pull back and hold up above that support area, well, that would show an awful lot of strength here in silver. Pulling back below this area would maybe raise some concern that we come on back down to this trend, which right now I think is probably more likely. But just watch that carefully, again, depending on how this market responds to the FOMC, could have a major impact on gold and silver. And of course, you could look, I've been mentioning these for some time. PHYS is physical gold. If you don't want to trade paper gold, which is in GLD, you can trade physical gold here. You could also trade PSLV as an alternative to SLV. So keep an eye on those here. Some pretty good charts in those charts, or in those as well. And then if we take a look at other places in the market, well, you just can't rule out things like copper. Big break here on FCX. Now, of course, this is a minor, I understand that, but copper is being shown to be in very short supply, and just a huge rally here in copper. If the dollar continues to weaken, I would expect that to continue. Any rest or pullback in this, I think, continues to set up that opportunity for that upside move. So let that rest up in here. Look for that next opportunity. You guys know I've been mentioning Palladium. Palladium's been making that move in here to the upside, breaking the downtrend. Any rest, consolidation formation at this point that pulls back, holds some price support in here. I would be watching for that next opportunity there in Palladium. So keep an eye on those. Quite a few of these stocks are moving up. Now, if we jump over into some of the commodity type things, we're seeing quite a bit going on. Take a look at corn. Corn, I think, is setting up here for an upside move. We've made this nice upside stretch. We've come back in here. We're finding support. Bulls stepped up in there on Friday. Watch for that next opportunity to come on through. And if you'll notice in here, we're pressing that 50-day moving average. If we were to pop through that 50-day up here and hold, we set up what we call a rounded bottom breakout in hit run candlesticks and right way options, and that opportunity that we could start moving on up to attack that 200-day moving average. So keep an eye on corn, keep an eye on SOYB, soybeans, also doing that same kind of thing up here, trying to break through that 50-day moving average, setting up that rounded bottom breakout pattern here in some of those commodity prices. And if you want like an ETF, take a look at like DBA. DBA has been running hot. I mean, really up. This is grain commodities. And oh my goodness, really running to the upside here. Needs a rest or pullback. I think just really stretching out, but you can see what's going on in ag right now. More of a general ag, if you're interested, would be something like Moo. Moo has a lot of things in it like John Deere and other things ag related, not just commodity based, but things that would be affected normally by an ag move. So watch that carefully. It's been creeping up here. It's not showing lots of energy, but it has gotten above its 50-day moving average, and it is something maybe to be paying attention to if ag continues to surge. Other places that you may want to look is some of those stocks that are in more of that defensive area. Take a look at Walmart. Walmart continues to show very, very strong consumer defensive stocks, looking good. This rest or pullback in here coming back into trend. No reason to believe if it can hold that support. This is an all-time high in Walmart, that could continue on up. I would keep an eye on that. I'm a little bit concerned about Costco, however. Costco had quite the run to the upside. I mean, this thing just kept running and running and running. And as you can see, we pushed up in here. We found a little bit of resistance, and we're seeing a tiny little bit of weakness in here. Now, this could end up being a lower high, particularly if this were to fall on through down below that area, and then we're really technically in a downtrend, beginning of a downtrend in the chart. So a little bit concerned on that one, but there are others out there like JWN showing a little bit of bearishness now. I think it could be setting up bearishly. And speaking of bearish moves, I've been a little bit hard on Google, but Google's got some news here this morning that is really surging. And I think this is one of the biggest reasons why the Dow is surging up so strongly the QQQ is surging so strongly this morning. And all of this move is based on the fact that Apple is talking with Google about including their AI, Gemini, on phones. So this is a big, by the rumor type push. We don't know anything about it other than they're talking about it, but it's got Google all kinds of excited here. Held this price support, pushing up here to this next resistance in the chart. Unfortunately, we're not seeing the same thing here in Apple. As a matter of fact, I see a potential here where we made a little higher low in Apple, but we're struggling here an awful lot in this chart. And that possibility that we could rest or consolidate right out here to trend and then continue that down move in Apple seems like a possibility. Now, if it can break this resistance and push on up, that would give us a bit more of hope that it could break that downtrend. But again, remember, these guys, these big tech guys right now are in their blackout period, and they can't do corporate buybacks here at the moment. So watch that carefully if this were to begin to fade. And again, in Google is a rumor right now. Don't be really careful about chasing that because it could whipsaw all the way back down in that chart. So watch that carefully. Let's take a look at consumer staples here. XLP has been running in a nice upside move, coming back into some support. Let's watch this carefully here. If those consumer staples pick up, we could bounce right in here like we have off of this trend for so many times. Watch that carefully. XLP could be in there. I would keep an eye on that TEVA, still looking good. I would keep an eye on BMY. Pulled back pretty hard, but found that trend, and so far is trying to hold in there. I would keep an eye on Pfizer. Nice little upside move here in that chart. This has been one that we've hated for a long time. Breaking downtrend, showing bullishness, all kinds of potential that we could find some buyers in here and push this on higher. And then I would even keep an eye on IBM. This pullback into here, we broke a little bit of support, but we've got a bigger area of support that could hold. Look for that opportunity. If it does hold in here, we could bounce back up, push back off. If we fall into here though, that's where things could be become kind of a complication for IBM. So this could go either direction. Just be a little bit careful on that. So there's quite a few stocks for you to look at. I've run this video quite long. Thank you so much for being here this morning. I truly appreciate it. Wishing you a very profitable Monday, and I'll see you right back here bright and early Tuesday morning. Wish you all the very, very best. Take care, everyone.